welcome back to the Banking Channel. My name is Kathleen as your host. Now, before I introduce our final panel session for the day, just a quick reminder, be involved in the conversation. If you're watching on a computer screen, just look over on the right side and you will see the live discussion area where you can chat with other attendees and drop your questions to our panelists. And if you're watching on a mobile device, then the live discussion area is just underneath. Our topic is titled Open Banking and Open Finance in Southeast Asia, with our expert panelists from Netbank, Cebuano, and Bloom Solutions. And this is being moderated by the founder and CEO of Brancas, Todd Schweitzer. Over to you, Todd.
Thank you so much, Kathleen, and thanks so much to the Seamless organizers and to you, the audience, for sticking around for this last session of Seamless Philippines. I am Todd Schweitzer. I'm the CEO and co-founder of Brancas, and we are a Southeast Asia-based open finance technology company. I happen to be based here in the Philippines, and I'm very excited to learn from the panelists on the session today. Today we'll be discussing open banking and open finance, which is really indicative of the future of digital financial services in the Philippines. And Gus and Luis and Rob have some really interesting perspectives to share. So I will turn it over to them very soon. First off, I want to give an overview of what is open banking and open finance, because these terms are thrown around a bit loosely. I guess before I do, again, to echo what Kathleen said, please ask questions. I'll be watching the Q&A, and really this is meant for the audience's learning, education, and enlightenment. So please participate, and I will point your questions to the panel. Okay, so open finance, big picture, and in the simplest way to describe it, it's a way of enabling financial services customers to securely access their financial products from third-party sources. Now, that's all, I guess, a lot of words, but what that actually means is I own my financial products, whether that's a savings account or a time deposit or even a retail investment product, and even the data associated with my account, like income information or identity information. And the principle of open finance is that I should be able to access that information and access those data products as I see fit, even if it's outside of the bank's own proprietary app that may or may not work every payday. And being able to create my own experiences, share my data with a third-party lender if I want to seek competitive rates, be able to send payments or actually pull funds without needing to log into different bank apps and initiate the payment, or God forbid, head to a branch and take a number to execute a payment or cut a check, right? So the principle of open finance is empowering the customer in financial services, and we're really talking about consumers and SMEs here, so that they can choose how they bank, choose how they access remittance products, and choose how they kind of bring together different financial services into a product that best suits them. What excites me so much about open finance in a market like the Philippines is you're changing the economics of serving populations that, frankly speaking, a lot of the incumbent institutions have neglected, right? And it's not really judgment, it's a fact. When you look at the fact that 50% of Filipinos are unbanked, and the fact that even small businesses often need to get informal loans, because creating a credit report for your business or for your banking history is really difficult to do so. And so I think the promise of open banking is addressing some of these fundamental gaps in the Philippine financial services industry around credit scoring, around identity, and being able to quickly authenticate and validate that, yes, you are indeed this banking customer, to be able to send payments and receive payments without needing to hop through multiple middlemen or visit a branch. And if you're a financial services provider, being able to reach your customers or even work with partners to reach your customers fully digitally without you needing to set up a kiosk at a mall or create a new app or open a branch in an island province, and being able to partner with fintechs that can use your financial services and offer niche products that serve them. So anyway, we're going to hear a lot more about kind of very specific use cases from the panelists, and that's why I'm so excited to introduce Gus, Luis, and Rob. So first off, Gus, I want to, if you can introduce yourself, if you can introduce Netbank, and also just describe how your model is addressing the new opportunities for business models in digital financial services. I think Netbank has a really interesting model where you don't have an end user app. You're not building branches, as far as I know, and you're really thinking of a different way of offering consumer and SME financial services. So say more.
Thank you, Todd. Thank you. Yeah, so great to be in this session, everyone. I'm Gus. I'm one of the founders of Netbank. So describing Netbank is a little bit difficult, but broadly what we are is we're a banking as a service platform, which means that we provide services to other institutions so that they can provide banking services. There's many ways of thinking about open banking. Todd described it at a product level. I like to think of it more as a mentality level. So our mentality is that we're open in the same way as when you meet somebody who's an open person, you kind of know what that means. That means that they're open to new ideas, open to innovation, open to collaboration. And so for me, open banking means a bank which can do all of that. So what does that specifically mean? If you look at what happens in banking at the moment, traditional banks do everything from production all the way down to sales in one organization. It's a little bit like where Ford makes the car, sells the car. That's breaking down, that's different. Even in auto, you know, Ford makes the car, but you have an independent sales. What you see in open banking is, or in banking generally now, is that the people who produce it, who own the balance sheet, and maybe a different group to the people who interact with customers. And what we aim to do is to allow that separation by providing a range of different services. At the very basic level, we can work with fintech as a pure utility, where we are just a simple producer, and what we're producing is loans which may be originated by others and booked on our balance sheet. It may be accounts which our partners are having the interaction with the customers and booked on our balance sheet. It could be cards. We're becoming a card issuer on a white label basis, or other people can issue cards. That's at the really easy level. That's at the pure utility level. But for me, openness means more than that. It also, as I say, it means working with others to come up with creative solutions. So for example, we've come up with joint control accounts for some of our partners so that they can reduce their credit risk. And we're even going a step further, where we're open to new business models, whereby this is really getting into what's known as embedded finance, where a non-financial institution realizes that it could be the initiator of a financial service, and they're looking for somebody to empower that. So that's what we can do. We can offer a complete neobank solution on a white label basis, a little bit like a Shopify for neobanks, whereby other institutions can say, oh, we need that service, that service, that service, to put together a neobank and launch it. We provide each of those underlying services and then let the marketing front just do what they're good at. Be good at marketing, be good at customer acquisition, and all the underlying plumbing is with us. So it goes all the way, as I say, from utilities to creative solutions to complete solutions.
And Gus, just to be clear for the audience, I mean, in addition to the software and the APIs and account opening utilities you're providing, behind the scenes, you are actually, I mean, Netbank is a proper licensed Philippine bank, right?
Yes, exactly. Sorry, you're absolutely right. So maybe I wasn't clear on that. Yeah, well, so we're a regulated bank, and this is a business model which doesn't really exist elsewhere in Asia, where the banking as a service is provided by a fully regulated bank. So there's no other parties to talk to. It's just we are the party who both provide these services to the fintechs or the other institutions, but also we are the regulated bank, and so the legal relationship is between us as a bank and the end customer.
Yeah, cool. Thank you, Gus. And I think it's a fascinating model because it's such a different way of thinking about banking services versus your typical commercial bank in the Philippines. It's thinking about how do we move cash trucks around the islands, and how and a really focus on the corporate client with some nice to haves on the consumer. So it's great to see you thinking kind of entirely new about banking as a utility, and as new business and unlocking new business models. Next to Rob. So Rob, I'll let you introduce yourself, but just as to kick things off, I mean, you've been with Cebuano Lulier, kind of looking across their business lines in transformation. And I think you've been at the forefront the last several years at taking a real brand name in consumer financial services, non-bank financial services, but really trusted by tens of millions of Filipinos, right? And pretty core to their day-to-day lives, right? And you've been observing, number one, as Cebuana has built up their banking operations, particularly online. And then you've also been leading a lot of the digital partnerships and kind of extensions of the typical pawn shop, remittance center, and consumer bank model. So say more about what you do and how Cebuana, a very legacy but trusted institution, is thinking about open finance and digital financial services generally.
All right. Thanks for having me here, Todd. Good afternoon, everyone. So I'm Rob. I'm heading digital sales and partnerships for Cebuana. So I think before I can answer that, I need to give a little bit of context towards Cebuana, because I think we have a different understanding of what Cebuana really is. I think at face value, a lot of people think of Cebuana as a pawn shop. That's what traditionally it's known. But for those that really know Cebuana, it is at the heart of financial services for the Filipinos. And as mentioned, bulk of Filipinos don't have a bank account, so we kind of serve as a main financial touch point for a lot of Filipinos. We have 2,500 branches. We're all over the country where banks are not available. So we're the go-to a lot of times in terms of trying to get money. OFW sends remittances, and that's where they pick it up, right? And as you've mentioned, we're that type of company where we've had to send a helicopter full of cash to our branches to make sure that people can get money. That's the type of business we're in. It's like really the physical movement of cash. But at the same time, we also know this will not be the business model of the future, right? Things are changing. Before the pandemic, 2019, we launched a bank product called Micro Savings. So part of our vision is really financial inclusion. So we have 50 million unique people who have transacted in Cebuana at some point in their lives, and we want to transform them, right? So if we talk about open banking, I think the first step is to give them a means and way for them to actually transact financially. So we launched a product called Micro Savings. We launched it in 2019, where all you need is 50 pesos, a simple ID, and you can open a bank account. And it's worked. We have more than close to 5.5 million now banked from underbanked or unbanked clients in a span of 2 years. And along with that, we also launched an app called Cebuana, where you can now open your account online and you can do your financial transactions that you used to do in the branches. And maybe where I would focus on is that journey to actually how we got where we are now. It wasn't an easy journey. We had to go through a lot of, I would say, transformation. And that transformation comes in different forms. There's like a transformation of mindset. You have to convince people internally that it's now time to not let our customers go to the branch anymore. They should be able to transact still with Cebuana outside the branches. There was a transformation of doing everything ourselves to partnering with vendors and allowing their expertise to build on our tech. And that also came with a lot of problems and baggages, because you're coming from a legacy system trying to adapt to the new technology. And a lot of times it's not an easy route. It's not an easy way. We still get comments like, oh, it's not that easy to connect with you. It's we're having a difficult time, and these are things that we're trying to fix along the way. We worked on an API manager on eCebuana to prepare us for that, right? So it makes it easier to connect to now all these fintech players so that we can offer new services. And we're taking this mindset and this technology even to the branch, because even though things are changing rapidly digitally, the need for the physical touch points will not, go away overnight. It will still take a long period of time for that to happen. So we need to have that change both from a digital standpoint and from a branch standpoint. And it's just a journey that we are still going through up to this day, and it's not easy, and it takes a whole organization to move as one to kind of change.
Yeah. No, and I'm so glad, Rob, that you bring up the organizational aspects first, because I think over and over again we see for the long-standing institutions that are shifting from a brick and mortar model to brick and mortar plus online, there's a lot of old habits, there are incentives, there are business models that need to change. And in the short term, that ruffles a lot of feathers, right? So unlike maybe Netbank that's starting from scratch and saying, we don't even need apps, we're just gonna provide the infrastructure. I think Cebuano is saying we have a brick and mortar distribution model that's been so tried and true, and now we have to undergo a little bit of internal healthy tension in order to shift to be kind of stronger for the future. So thanks for that, Robin. We'll come back to, I think, some of the partnerships that you're doing with third parties. Luis Buenaventura, over to you. So Luis is in a very interesting vantage point, because Luis is one of the founders of Bloom Solutions, which is an early and well-known cryptocurrency exchange and cryptocurrency-backed remittance provider. And he's also, as of this month, Yield Guild Games' new Philippines country manager. So he's in a super interesting point of view to see the future of digital financial services, with one foot looking at, or maybe half a foot now, looking at traditional financial services and on and off ramps so that Filipinos can access decentralized and cryptocurrency financial services. But then he's also seeing, if I can say, an entirely new economy within the Philippines really flourishing over the last several months in particular. I'd love to talk more about how kind of open finance is actually a contributor to and a complement to the metaverse and decentralized financial services. But maybe you can start, Luis, by just sharing your background and experience with Bloom and YGG, and how you're seeing kind of traditional business models evolve.
Sure, thanks, Todd. And hey guys, this is a real pleasure. So yeah, my name is Luis. I've been in the Philippine crypto space for about 7.5 years now. So I got to observe it from the days of the libertarian Bitcoiners trading money in an unregulated way in the Legazpi street market. Believe it or not, that was a real thing 7.5 years ago, all the way through to the point where the Banco Central started creating a real license that companies could actually obtain to become what we now call virtual asset service providers, or VASPs. One of my companies, Bloom, is a VASP holder. And we've got about 15 of them right now, all kind of operating in the country in various capacities. So there's quite a lot of business and competition already just on the VASP level. But kind of what's happened over the last 2 years in particular is what really kind of just fascinates me. We've got a whole bunch of people who, kind of were born after 2000, right? Who are entering the economy for the first time, and they're doing it very weirdly, where their first financial services kind of interaction are with things called decentralized exchanges, where you convert one made-up currency into another made-up currency, and for some reason that is all okay and that all makes sense. And then they are taking one of those made-up currencies and they're investing it in a what you can only describe as unregistered securities, because these are crypto tokens that, you know, appreciate in value through the continued community support, right? And then they are potentially putting their savings into staking mechanisms that are earning an annual rate of return exceeding 100%, right? And these are all things that are happening right now. And I believe there's at least about 1 million of these kids that are kind of on some level already accessing these things. So I think that, you know, let's just say we've got a lot of work cut out. We've got a lot of work ahead of us, right, to kind of compete with stuff like this, because the way that the decentralized movement has changed over the last couple of years have basically made it so that it's very hard when you are one of those kids whose first savings account earns 100% in interest per annum. It's hard to go back, right? It's hard to kind of go back to, like, say, yeah, I'll take that 0.5% interest from a more traditional provider. It's difficult, right? So we've got a lot of work ahead of us to kind of achieve some kind of parity. Yield Guild itself primarily focuses on what we refer to as the play to earn economy. So the play part is pretty easy. You play video games. The earn part is slightly harder to wrap your head around. These games actually throw off real revenue for the players. Of course, the revenue that they throw off is cryptocurrency. And then, you know, now that you've got cryptocurrency, what do you do with it? Well, now you go through that whole system where you actually turn it into groceries at some point, right? That's kind of the goal here. So there's still lots and lots of ways that these kids interact with the physical world. I like to call that meat space, because this is where, you know, kind of the actual flesh and blood stuff happens. But predominantly they live their lives kind of in the metaverse level, which is kind of this new thing where, you know, it's all cryptocurrencies. It's all these shared universes where you are both earning and socializing and learning, kind of, you know, separately, very separately from the physical realm. And it's pretty amazing to watch it, right? It's very much I would say that the pandemic has supercharged the growth. It definitely was nowhere near these numbers back in, you know, like early 2020 or late 2019. But yeah, we're looking at least 1 million young Filipinos who are kind of in this space right now. And those are just the guys who are playing Axie Infinity. That doesn't even count all of the other people who are already in crypto prior to all of this stuff. But yeah, it's a wonderful thing to watch. And I look forward to discussing it at length because there's a lot of stuff to unpack.
Cool, thank you, Luis. And just to continue for a second, so you know, you described the meat space, right, in the world we live in with traditional financial services and queuing up in branches to withdraw, you know, in real cash, right? For this, I love how you described it, that there's basically a new generation of young Filipinos that are actually thinking first about their metaverse earnings, you can say, and metaverse wealth, right? A priori, right? So my question to you is, what sort of infrastructure exists in the meat space in the traditional world that is enabling this new generation to actually move back and forth? And I guess more importantly, what's missing from that?
Yeah, sure. So this is basically the business strategy for 2022, I suppose, that we'll be talking about. But yeah, look, we've still got the whole question of how do you actually go back and forth from cryptocurrency into peso. And thankfully, we've got a lot of those virtual asset providers that are doing that. However, blockchain as a concept is only simple on the first layer. And this is what we call layer one. This is Bitcoin, Ethereum, Cardano. These are what we call layer one coins. There is a second layer on top of that where it's an entire other universe of tokens that are actually built on top of those blockchains. So in terms with Ethereum specifically, you're talking about hundreds of other you know, kind of transactional layers that have been created on top of Ethereum. Most virtual asset service providers can't access that. They don't have the tech for it. So, you know, with Axie Infinity specifically, they actually created their own layer 2 blockchain so that they could get around the fact that, you know, Ethereum network costs are quite expensive. If they transact purely on that layer 2, all of their transactions are essentially free. They only start to get charged as soon as they come back down to layer 1, and then they'll get charged again when they go from layer 1 into peso or something else. But kind of if they exist on that upper layer, all of the transactions are free.
So what you're saying, Luis, so what I'm hearing actually is the first infrastructure gap to solve is actually enabling, for example, the Philippine VASPs to actually connect to more interesting decentralized financial services that throw off yields and that are actually a source of financial service development. Even before we think about the traditional side, those DeFi rails need to get built first, huh?
Yeah, I would think so, because a lot of the money tends to get trapped in layer 2 because no one wants to pay the exorbitant fees involved in kind of, hopping from layer 2 to layer 1 and then layer 1 to peso. That's all expensive. I would say also that one of the other gaps, and this one is kind of more macro, is that a lot of these kids who are, if they're 18 to 21, it's very unlikely that they would be able to pass any KYC. Because you're not working with IDs yet, unless we start to add rules where, kind of a public school ID is enough. Typically it's not. So from an identification standpoint, from a KYC standpoint, kind of we tend to, we have a big blind spot right now. And what happens is that you'll get all of these middlemen kind of on the ground where they just they will act as kind of brokers for all of these individual kids who are maybe 18 or 19 or whatever, and they don't have their own ID, but this guy has a coins.ph account maybe. So this guy now can, do the trades on behalf of these people. And we'll see that forever, for as long as, we're not able to properly facilitate the national ID system or some other kind of way to get these people into the fold. Because, it's not that they don't want to, it's just that, the mechanisms for doing so are a little bit too difficult when you're living kind of in a far-flung, provincial town or whatever. It's a little bit harder for them.
Yeah. Thanks, Luis. Rob, I want to follow up on something in your introduction, right, about the challenges and sort of the business model shift that Cebuano has to undergo to prepare for open finance and for digital finance, and even some of the early stuff that Cebuano is doing in crypto. How could you share a bit on how Cebuano as an organization, or how some of your projects, how you're thinking about the commercial opportunities in open banking and new business models that have emerged, right? Because your typical brick and mortar distribution and charging a toll for that, that will probably persist, and you will still have channels maybe through eCebuana. But I think increasing, I would imagine that there are new business models that Cebuano is looking at, that maybe in an entirely brick and mortar world would not be realistic, but are now actually seen as a new source of revenue growth.
Yeah. So thanks for that, Todd. I fully agree that I think we've had to rethink a lot of our business models and approach. So maybe one specific example is we have a payment gateway. It's called PeraPal. And that payment gateway used to be just a way for you to pay, like, let's say if you were in a website and you check out over the counter and you pay via Cebuana. So we've had to change the mindset of looking at that option as just Cebuana and really see that if you look at the customers, they're looking for all the possible options in terms of touch points, right? So as an organization, what we're doing is we are now allowing through PeraPal for you to check out with almost all the different options through other banks, through credit card, through other over-the-counter. And I think one of the bigger shift there is we're not doing this on our own. We're actually partnering with different fintech companies to enable us to open these other touch points. Because if we did this ourselves, so imagine talking to each bank, each over the counter, it'll take years for us to get all these agreements in place. So by using aggregators, we become an aggregator ourselves, and we can pass on this solution not just to our customers, but even to merchants. So I think this is one mindset. It takes the whole open API, open banking principle into what one of our products. And I think this applies to some of our different approaches. Another approach that I can give us an example is we used to sell our jewelry only in the branches. Because of the pandemic, we've had to be very creative in terms of how we unload, all these jewelries that have been foreclosed. So we created a website to connect all our branches, sell the jewelry. But I think more than that is we've utilized social media, e-commerce platform. We do Facebook Live. We do, the different e-commerce platform. And it's getting to a point where our brick sales and our digital sales is actually, the digital is catching up the brick sales. And it won't be long where the digital sales will surpass the brick sales. So I think these type of pivots or shifts in our business model have helped us kind of tide, I guess, what COVID has done. But again, I go back to the principle that coming from a very traditional company, it was not an easy route. Convincing everyone that selling on an online platform will surpass our brick platform. And I think that mindset is very consistent, right? With what I mentioned about Cebuano earlier, to these shifts that we've done because of the pandemic.
Yeah, got it. Thanks, Rob. I think these are great examples, right? Because the old world is, run everything in-house, run it through your brick and mortar branches that you've taken time to develop, and building the trust and allowing for revenue to come from different sources, even if that means a short-term drop, for example, in branch revenue is a difficult organizational decision, but super necessary. And it speaks to, I think, again, what I find interesting about Cebuano is they're taking, if anyone could continue to focus on the deep vertical model, it would be you with 2,500 branches, and yet thinking of a platform model and pulling in third-party financial services and plugging them in is, I think, a pretty smart a smart approach moving forward, and indicative of how kind of what the future looks like.
Just to add to that, so I mean, building all these platforms, it's allowing us to partner with other players, and I think that's the key, because having these assets now in place, and I go back to the jewelry example. So now we're starting to offer buy now, pay later options, which are not ours, right? And these are from other fintech companies, and I think that's the mindset now. The more digital assets that we have in place, the more open it makes us to even accepting these type of services from other providers.
Yep. Yeah, and then the mindset shift required, I can only imagine. Cool, Gus. Back to you. I think Luis gave some thoughts on what's missing and what needs to be built still to enable this generation of new financial services customers to interact, right? To move money in and out, and also access, easily access kind of alternative financial services. On your side, though, you're building the meat space rails, and I think it would be really nice for you to comment on what is the state of kind of traditional financial services infrastructure in the Philippines. And I know it's a big question, but you can speak to kind of ease of payments between customers and between banks, flexibility or inflexibility on existing regulations, and just share kind of, because you can have a digital first mindset, which you had. I mean, yours is even beyond a digital first mindset. It's an appless infrastructure utility mindset, an open mindset, as you said. But even that, at some point, you're going to come across the paper paper-based, double-stamped, notarized documents that are required for certain traditional financial services. So give a snapshot of kind of what's already in place to enable a bank like yours versus what is still a work in progress.
Yeah, so it's a really interesting question. I think when you work in the Philippines and you see the level of infrastructure in the Philippines, that kind of feels like normal after a while. But when you compare what's viable, what's done elsewhere versus what you see in the Philippines, you realize there's a really very big gap. I mean, I think a huge shift is going to happen through instant payments networks. I think the rollout of InstaPay and what that means creates a whole range of new business models, and that is only just starting. And if you look around other markets, either in Southeast Asia or in other places, you can see that then there's a rapid flow of new things that can be done around fintech once that's in place. I mean, even maybe sort of like less revolutionary than that, basic things like card issuance and co-branding on cards, BIN sponsorship, a wider range of prepaid cards, etc. That revolution is also, that's another revolution to come.
What's BIN sponsorship for those who don't know?
Oh, I'm sorry. Yes, that's where it's basically a little bit like co-branding, where one entity is the card issuer and another entity is the marketer of a card.
So it's like an e-commerce site having a co-branded Netbank plus e-commerce Visa or MasterCard.
Exactly, exactly. And that's, that market, say from the US, has been, that drove the adoption of cards. One of the really interesting questions in the Philippines is because some of these sort of, if you like, core channels aren't so developed, there could be really big leapfrogging going on. Things like QR payments maybe will take the place of cards in a lot of places. Equally, when there have been, in other markets, there have been accounts as a service. In the Philippines, now there's notions around virtual accounts, which is where you provide an account with a reference code sort of built in. Some more innovative ways of structuring accounts may make it possible to leapfrog over some of these earlier technologies. That's just a couple of examples. And I think the other thing, I think that we keep on going back to this notion of partnership ecosystems. I think with the way that the regulation has developed, it could well be that you see a leapfrogging over each proposition having their own license to a proposition where, to an ecosystem where you have people providing the license separate to the brand or the marketing proposition, which means that you can have a whole proliferation of different banking services out there, like thousands of different banking services provided by a regulated entity, but with really narrow segment-specific solutions. I think that's where the Philippines is likely to go. This very segment-specific business models which are very specific to particular segments, using common rails, but with marketing expertise to address those specific segments.
Yep. It's not just marketing expertise. It's pulling together of, what I imagine in the not too distant future is maybe there's a new fintech app that is specifically focused on the fishing community, right? The fishing community, coastal fishing communities or agricultural communities that are basically not served by the large banks. And those, you may have the cooperative that's actually being banked by Netbank, or you have the individuals who are banked by Netbank. But the app is an app for fishermen, fisherwomen in the community. Their deposits are sitting with Netbank. They're using Cebuano's Parapal for and Cebuano services for cashing out rather than going to a branch to cash out, right? Or they're using they're accessing their play to earn winnings and sending that partly to a DeFi account and partly to a peso account so they can use day to day. But that's all done from a single app that is not Netbank app, it's not Cebuano app, it's not YGG app, it's some third-party fintech that's like fishing.ph that's pulled all these third-party services together and built their own banking product, right? I mean, maybe
And that institution which pulls it all together may already be known and trusted by the fishermen. It could be the local association of fisherfolk, whatever. And so that rail, you asked originally, what are the missing rails? One thing that you do see is that everybody in the Philippines is doing some form of financial services. This is, they're not doing it through banks. So these financial services activities are already all over the place. And if you like, those are the core rails. The thing is that they're just not very they're not very sophisticated because they don't have the banking networks. So I think the revolution is that banks will discover those existing institutions with the relationships.
Yep. And I also have a question for you guys from the audience. So someone in the audience was asking if Netbank is a quasi-banking app. And I think, I know the answer to that question, but I think I guess it's worth repeating. Maybe if you can simplify Netbank's model, because it's hard to wrap your head around, because most people associate a bank with like the branch down the street, right? So Netbank is a bank, but how are you reaching customers?
So yeah, exactly. Netbank is a bank which operates as a utility. So we are a regulated institution. We are constituted as a rural bank. But the difference is that we only work through partnerships. And we can provide a range of different services to those partnerships, from issuing loans on behalf of through the partners. We actually do have an app which we can white label. So if somebody wants to build a service with that app, with our in-house app, you can do that. But you'll never see Netbank go out there and try to sell Netbank's services. That's not our job. We work with other people who do the sales, who have the customer interaction, who probably have some sort of relationship already with customers, and we just basically provide the underlying plumbing.
Got it. Okay, thanks for that. And then I want to go back to Luis as well. So Luis, say a bit more about what your community of play-to-earn managers and scholars are looking for with financial services, right? I think it's a great premise that they're thinking first about the metaverse and then about how to use their metaverse wealth in the meat space world. But if you can share more about how, what do these partnerships and particularly the kind of open finance rails that a handful of financial service providers, two of whom are on the call, are actually starting to provide, and how kind of more digitally thinking traditional financial service providers can actually address this million-plus cohort of customers who, as you rightly point out, have a damn hard time accessing, even having appropriate ID to access, and forget about a credit score, right, to access traditional financial services. So say more about kind of what are the traditional financial services provided digitally that could support this cohort of users?
Sure, of course. So I guess just going back to the demographic itself, right? The average, so we can actually kind of derive a lot of things just by knowing one simple fact. The average Axie Infinity player, supported by YTG, will probably earn somewhere between 15 to 20,000 pesos per month. That puts them squarely in kind of the range of kind of, low income, maybe kind of lower middle income, depending on how many people are in their household. And because we know that they're all quite young, kind of 25 or younger, generally speaking, although we do have we've got cohorts basically in every age range. We've got some lolos and lolas playing Axie Infinity also, which is a wonderful little story. But for the young people, they are literally earning the first money of their lives, meaning that they have no context by which to even measure whether this, kind of any of these processes are correct, right? So they don't know the first thing about tax registration, for example, because why would you if you've never made an income before? They don't know why you need to put money in a bank. Why would you? Is that a thing that you can earn from, or right? I mean, so there are very fundamental questions that aren't answered for them because this is the only time in their lives where they've ever had to ask it. And things like, so for us, the way that we, it's like I've spent my first 6 weeks with YTG. So like, as Todd said earlier, I'm a newbie in this company. The company itself is a little over a year old, still quite young. I've spent the first 6 weeks just trying to get to know the demographic as closely as I possibly can. And a lot of things become very apparent. They really need guidance and information and education, and not necessarily from people who are trying to kind of extract value from them. I guess that's kind of the thing that I'm trying to balance, because the thing is, they are potentially, you could treat them as if they are wage earners. They're not employees, for sure. There's no employment contract, but they are wage earners. And that means that there is a regular income that they are generating. And you know what that regular income is because we can see it on the blockchain. So what can you do with that information? Suddenly things like loans make a lot more sense. It doesn't have to be collateralized because you can literally see what their cash flow looks like. The history is kind of right there very obviously. So like when we do things like, for example, just theoretically, but if we did something like an equipment loan, because this kid doesn't have a laptop, he doesn't have a computer, he would like to have at least a tablet, right? I know how much they make, and I know how much we could loan them with very, very little risk, right? So there's that, and then there's all sorts of other stuff. What else comes along with being a wage earner? Surely you should be entitled to some kind of healthcare or some kind of, something to make sure that, like when you fall ill, there is something that will catch you, right? So those mechanisms don't quite exist for Metaverse employees just yet, right? So these are kind of things that would be very interesting to build. So basically, the way that we look at this problem is we imagine that being a Metaverse level wage earner is a job. And if we accept that it is a job, what are all of the services that you can provide to these people who have jobs, right? And that's everything. That's everything: legal, tax, healthcare, social security, et cetera, et cetera, et cetera. Like so that's the way we look at it.
And that's such a different such a different narrative versus speculating on Bitcoin or buying a mining rig, or just trading cryptocurrency, right?
Sure.
What you're talking about is participation in an economy. Yeah.
I mean, because I am an old school Bitcoiner, right? I rejected these ideas when I first started learning about it. But the closer I looked at it, I realized that what this is really is, it's an industry where the revenue model has been flipped. Typically, kind of in any other traditional revenue model, the company, the corporation building the thing will take as much of that income as they possibly can. The reason why play to earn works is because the company that is building the thing takes almost none of the income. They make 4% at best of all of the revenue. 96% or more goes to the community. And because of that, you've got your most fervent, most loyal, most fierce supporters, right? Because they will fucking defend that to the death. Sorry, pardon my French. Because these are now their livelihoods that they're trying to protect. So the company itself does not need a PR service. The community will do it for them, which is kind of a very interesting way to think about it, right? It's very, very flipped, which is also one of the reasons why I believe it'll be hard for traditional game companies specifically to catch up to Axie Infinity, because how do you convince Nintendo to give away 96% of their revenue? I don't know how you do that, but anyway, that's it. That's
thank you. It's fascinating. Rob, I want to ask you another question, and then a kind of actually one for everyone, but you can also offer it. So, Rob, on you, first off, is Cebuano thinking, because you have this last mile distribution that's pretty unparalleled in the last mile brick and mortar distribution that's pretty unique in the Philippines, is Cebuano thinking about participating in the kind of crypto economy and enabling kind of DeFi and non-traditional open finance products for its customers? And then my general question for actually all of you is, we talk a lot about very new ways of interacting with financial services entirely online or partially online, there is a massive learning curve in terms of security and user protection. And I think this is something that probably we're all dealing with to varying degrees. But I think, how do we, whether we're a bank but we don't have physical branches and staff checking physical IDs, right? Whether we're a play to earn guild that is generating revenue for scholars and making sure that that revenue is actually getting to the scholars and they're not being scammed along the way, or Cebuana that's bringing, that's doing massive transaction volumes online and offline in combinations of the two, and making sure that there's not somebody in the middle, you know, behaving badly. So anyway, so Rob, please, so about how Cebuana is thinking about kind of decentralized financial services and crypto, and enabling the economy that Luis is describing, and then also how you think about digital customer protection.
All right. So on the first part, it's a very interesting topic, and I think Cebuana has talked about crypto and blockchain at length, and we've gone through various stages. I think at face value, we made an investment with the crypto company SEI. That's public knowledge. So that means we are serious about, you know, crypto and blockchain, and that investment is still there, but it's treated separately, you know, outside our regular dealings. We do have partners in the remittance field where you know, Ripple and the other players are. So we do have those in place. We've had wild ideas such as tokenizing gold of Cebuana, you know, these type of discussions, which I think are good discussions to have, especially when ICOs were still a big thing, just fairly recently. But I think where we are now, before I get to what Luis said, is more on how do we capitalize on blockchain solutions for our current problems, right? And let me give you specific examples of things that that are coming to life soon. So like, I think first is identifying what are pain points that we believe blockchain can fix. Cebuana has an insurance brokerage firm, CLIB. We sell a lot of bite-sized insurance. And I think one big pain point there would be claims, right? And claims is such a hard process. We are a brokerage. You have a big insurance company, and you have the customer. And for you to get a claim, there's such a long, lengthy process. These people who have just, you know, went through a fire, somebody died, and they need the cash from this insurance right now, unfortunately need to wait for some time before they get this. And I think, you know, putting claims in some sort of blockchain where the insurance company, us, the one claiming, can all validate, have one source of truth, and can have the claim like on the spot when they go to the branch, is something that is of value to us as a company, right? So we look at what blockchain can actually solve for us more than, I think, you know, the things that Luis has mentioned. But going to what to that very, very exciting, I would say, crypto space right now, what we're trying to do is become, I think, part of what you explained. I don't know if that's the tier one or basically the conversion of cash to crypto. What we're trying to do is make sure that we provide this option to the customers, plain and simple, right? I think at face value, even though this is probably one of the most expensive steps, a step that a lot of people are trying to avoid, it's a necessary step. And an over-the-counter step is still part of the process, and being part of the network of aggregators for you to do this is very essential. So I think at face value, we're making sure that we are an option should you need this touch point to convert peso to cash. So peso to crypto.
Great. Thanks, Rob. And then maybe just open question for the three of you. I mean, how are we with these new, again, these new financial services models that are entirely online, and not just online, but kind of bringing together several services at once? How are you making sure that the end user is protected? I mean, we're talking about scammers, but we're also talking about problems that result in wealth disappearing one way or another. So maybe Luis, start with you.
Sure. So there's a lot of so we don't call them industry associations. They're just community associations, and they are kind of the most prominent guilds in the world, kind of in the play to earn space. They're all chucking in a little bit of money to finance a nonprofit group. This one I'm talking about in particular is called ASPL. So they're like a league for, kind of standardizing a code of conduct for guilds, guild managers, sub managers, et cetera, et cetera. So it's kind of happening organically. It's quite similar to the way Japan's crypto industry did it prior to regulation. Like there was an industry association that had been put together by the biggest guilds, the biggest exchanges, I should say. And that was kind of how they represented themselves to the regulator. So I think that we're seeing that happen organically now. I mean, there's always going to be bad actors, but what we can do at least is, kind of have a standard set of expectations, make sure that that is as noisy and visible as possible. And then hopefully the good actors are more prominent than the bad ones. And again, the community itself is rich, and I don't mean rich as in financially. I mean like it's deep. Like there's a lot of interactions going on there. And when something goes bad with a particular, say a particular new guild, maybe the scholars got cheated or whatever, like that news spreads like very, very quickly, right? I mean, and the community will usually have reacted to it way faster than any like government body could have. But yeah, I think that the best way we can kind of prevent stuff like that from happening is to be proactive and kind of just unite, at least at that level where you have like a shared code of conduct for all of these guilds.
Yep. Okay. I know we're almost out of time already. I guess what I want to do is just very quickly, each of you, kind of one or two sentences on what you see the future of online financial services, let's say 2 years from now in the Philippines, and that would actually benefit you as a user of those services. So maybe Gus, start with you.
Sure. I mean, what I would really hope is that we can start the transformation of the existing networks. As I said before, everybody in the Philippines has deep financial services activity. Everybody is borrowing from somewhere, doing payments somehow. And the struggle for the average Filipino is that these services are often just not that great because they haven't been put within a regulated environment. And so they're kind of risky, they're often expensive, etc. Now, obviously, Cebuano is taking a massive lead in this and is showing what is possible here. But there are so many other potential financial networks out there. So what I really hope is that we can, as a sort of like open finance community, start to convert these existing institutions, which everybody already trusts, into really reliable, really professional institutions.
Awesome. Thank you, Gus. Rob, what do you expect to see 2 years from now? And what would you like to see as a customer here?
Yeah, so I think what I foresee first is more co-opetition. And this co-opetition will be from people who you would not think that they would actually work with each other. Because I think there won't be a choice because of how the shift is just happening. And this will be across the different financial touch points, whether you're a bank, over-the-counter, crypto, we will need to work with each other. I think that's one. Two is, I think a lot of the services will become, I would say, more affordable at certain parts of the chain. And I think this would favor more, especially the lower segment, but there will be certain parts of the chain where either it will be the same or more expensive. Therefore, it means how you keep that currency in whichever platform will be used differently versus how you're using it now. So I think those are the two things that I kind of foresee.
Great. And Luis, 1 or 2 sentences and kind of what you would like to have as a user,
Sure.
as a customer 2 years from now.
So I don't want to be the pessimistic one, but I am a little bit worried about regulatory crackdown. I see it becoming more and more aggressive all over the world, the United States in particular, but it's starting to kind of made itself known here in the Philippines as well. I wanted to point out really quickly that the reason why people don't worry about things like MP3 piracy anymore, I don't know if you guys even remember this concept from the 2000s. The reason why that is no longer something we worry about is not because the regulators got better. It's because Spotify got better and iTunes got better, meaning the services that were legitimate became more convenient, became more fairly priced. And now, why would you want to bother to, pirate an MP3? That's ridiculous, right?
Yeah.
So the same thing needs to happen with banking, with financial services, with all of that, because otherwise the market will keep going further and further away from kind of this regulated space. And I think that's what we're trying to avoid, right? We're trying to keep it in the light as much as we can. And that's
Excellent.
it. That's my thing. Yeah.
No, great. Thank you, Luis, and it's a great to remember. Gus Poston of Netbank, thank you so much. Luis Buenaventura of Bloom and YGG, and Rob Afzelius of Cebuano. Thank you so much. Fascinating discussion. Kathleen at Seamless, back to you.
Thank you so much, Todd, Gus, Luis, and Rob for this wonderful session. About to wrap up. So thank you guys for all those who have missed sessions for Seamless Philippines. The platform is still live on the next 4 weeks. So do get back on those sessions. Thank you again to everyone. And in behalf of Seamless Philippines, thank you and stay safe. Bye.
Bye.